Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be with you here on Monday, the 18th of November, as we delve into markets and try and make sense of it all in this post-Trump era. Federal Reserve throwing a little bit of a spanner in the works since the last time we spoke, but we'll talk about all of that after we discuss the disclaimer, which says that everything we're going to talk about tonight is general in nature. It has not taken into account personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it very carefully and determine its objectiveness, its correctness for you within your objectives, or seek the help of a financial professional to do that. Don't forget that trading is risky. You could lose money if markets don't go the way you'd hoped, and it's always you who's responsible for the stuff you do and not me. Apart from that, it's pretty simple tonight. You ask me about various stocks, commodities, bonds, crypto, anything you're interested in. I'll give you my best technical analysis reader, or it could be something to do with just trading in general. I've got a really great case study tonight from Rebecca about a trade that didn't go the way she'd hoped, and maybe there was a better way to deal with it. So I love those things. Definitely send those sorts of things in where we can all learn together. Let us head over to the AMI Broker screen to kick us off. And to kick us off, we're going to start with the portfolio management model, and that's where we use the two major indices, one for the US, that's the Nasdaq Composite, and one for Australia, that's the ASX 200, to determine how much of our capital we should have at risk at any point in time. This says nothing at all about individual trades. Okay, so it doesn't say take 10 trades or 12 trades or 13 trades. It just says, well, I've got X amount of dollars and I'm allowed to invest how much of that. When the going is good, we've got very clear-cut short and long-term trends. Price action is strong, the candles are strong. We go to full risk position. We make hay while the sun is shining. As some of those aspects start to diminish, we then start to pull back on our maximum risk. So again, we can invest, but we must therefore keep a minimum, by extension, a minimum amount in cash to keep us safer from the volatility that is more likely when those factors start to come off. I'm still full risk position, well, at least we were full risk position last week on the Nasdaq. Obviously, our last update was the 11th of November, and therefore we were in the middle of the Trump rally. And, charts looks very good at that point in time. If you look at the week that was last week, since our last update, last 5 candles, so it'll be that one, Friday, Thursday, Wednesday, Tuesday and Monday. So, 5 not great candles, to be honest, and certainly Wednesday, Thursday, Friday becoming increasingly worse. But it's not enough to push us off an FRP, I believe, because we're still showing short and long-term uptrends, and the price action, for all intents and purposes, is still fine. It's still rising peaks. Don't know where this next trough's going to be, but it's still fine. And nothing goes up in a straight line. We've seen pullbacks like this. I'm going to start to get more concerned, as in I would start to potentially move to a different risk position or a low risk position if I see a really strong black candle close, low candle close beneath the short-term trend ribbon. That would give me cause to pause. Not that far away from it, to be honest, but more likely if I saw a lower peak being set, again, nasty candles, low closes, and a lower peak and a close beneath the short-term trend ribbon, I think would pull us back to say sort of take a third off the table sort of scenario. But we're prognosticating. I don't like to do that, but just giving you an idea of what to look out for is probably a better way to put it. In Australia, funnily enough, it's actually quite amazing. We've managed to dodge all of last week's carnage, and even today we actually had a really strong trading session. So how do you explain that amidst a potential US-China trade war, and potentially we're going to be caught in the crossfire? I don't think you do explain it. You just say, well, demand still is greater than supply, and that's really all that matters. Probably can change this trend ribbon colour back to green, because that's what's happened since I last updated it, and maybe we'll just even move that a little bit along there to show us where the long-term uptrend ribbon is. Still high peaks and high troughs, yes, definitely. Candles are a little bit mixed, to be honest, but becoming slightly more demand-side oriented. A nice little downward pointing shadow into what is shaping up as a pretty key demand zone, I think, between sort of 8107, 8149, and then this little spurt down here to 80.63, probably that point of no return, as in if we get beneath that, we're interacting with the long-term uptrend and doing something else. As it's the same thing until I see the black candles, until I see the lower peaks, and just basically indications of supply side control. There's really nothing to do here but stay FRP. So if you're managing, half your money in America, that's what you do. If you're managing half your money in Australia, that's what you do. Let us have a look around the grounds to see if there's anything that would push us off that thesis. And this is getting pretty close, actually. I mean, similar week to the Nasdaq in that we've got a pullback. But again, if we assume that this is the heart of corporate America, the stocks that are most leveraged to that Trump trade, something really unwound last week, particularly Tuesday, Wednesday, Thursday, Friday. So euphoric and then literally thud back to earth. It's disappointing. You can hear the disappointment in my voice. Hey, I like it when things don't have to go up rapidly, but just low volatility uptrends. They're the ones I like. I don't prefer not to see black candles if we can avoid it in an uptrend. But we're back to a pretty important level here at 2300 down to 2260. Short-term uptrend ribbons in that area as well. We do need to see a quick resolution. I mentioned that in tonight's evening rapid market index. Many of you probably read it, but I'd like to see it get resolved tonight. So nice downward pointing shadow, white candle, just telling us that the demand we really do expect. I mean, there really should be demand in there. We want to see that kicking in. And same goes for the Nasdaq in that short-term uptrend ribbon. Let us head over to Europe now, and a bit of a mixed sort of week since we were last here also, but not great trends there in France. Neither here nor there in the short term, certainly in Germany, but a reasonable long-term uptrend. And we're just seeing equilibrium in many markets external to Australia and the USA. It's just funny how we're actually still doing all right, or it's even more funny, I guess. Spain actually bouncing off the long-term uptrend ribbon. Heading over to Asia, are we hitching our wagon to Asia? Not really, because the Hang Seng got hit last week. You could call it disappointment over another event that passed without the big bazooka of Chinese stimulus. I'm talking about the MPC meeting Friday before last, if I'm not mistaken. And that's no surprise to me, because I certainly am not expecting the Chinese to do anything when we expect it. They'll do it when in their own good time. Nikkei is very much an equilibrium market. India now transitioning to an equilibrium market. That's interesting. Because that was one of the best trends through 2024, and the Shanghai Composite was also pulled back again on much of that frustration, I guess, regarding a lack of Chinese stimulus, which, just bringing it back to Australia, makes us look even more amazing, isn't it? It's a big pat on the back to us, and looking on a sector basis, we can say that the consumer discretionary sector is still looking very, very strong. Their energy's actually just perked up over the last couple of days, but hardly anything to get excited about. Financials, hands down, still the strongest Australian sector, and probably explaining much of the conundrum that I just posed to you, in that the Aussie market is still pretty much our big banks and a few resource stocks, and it's the big banks that are protecting us, insulating us from the rest of the world performance there. Gold sector has pulled back sharply. If you've been reading my content on Market Index, you know that the Trump plus red sweep was the absolute worst case scenario for gold, because it means a big spike in market yields, in risk-free yields, and that is gold's worst enemy. So we've seen a big pullback there. It also eliminated a great deal of uncertainty around the election result, and part of the reason why gold was bid up was because we thought we'd get we didn't know what the outcome was going to be. We didn't know if Trump was going to accept the outcome, because most people, I suggest to you, thought he was going to lose. Not only is he accepting the outcome, he's loving the outcome, and therefore it removes a great deal of uncertainty, and therefore a great deal of the reason to own gold. In the short term, in the long term, both of them were going to be potentially inflationary and debasing of the dollar. So that could pull gold out of this funk in the medium to long term, but it is shot in the short term, unfortunately, as a result of events. And you can't see those events coming unless you absolutely knew in advance that you're going to get the Trump with the red sweep, and if that was the case, you wouldn't have been long gold anyway. Healthcare is in trouble. turning down. Technology still fine, certainly a big beneficiary of the Trump trade. Materials has been hit on the back of this theory that we are more likely now to get a trade war with China, and therefore we will be collateral damage, or our resources stocks will be. Property sector rallying a little bit on market yields, stabilising, not coming down but stabilising. Staples getting a bounce in coals. Telecommunications is effectively a technology index anyway. Utilities are having a strong bounce. Not really sure about that one. It's about 3 stocks anyway, and maybe stabilisation in yields like property there, but there's some beta there that I can't really understand. I don't understand everything that happens in markets. That might surprise you. Just checking the Aussie dollar because we can. It's right there, and that's tagged. I don't know, pro-US growth. The result, obviously, pro-US growth, anti-Chinese growth, and therefore I think the Aussie dollar getting tagged. As a result of that, let's head over to the London Metals Exchange, and I'm going to change that to a line chart because we won't be able to see it otherwise. And we can see there that we have had a big pop actually in aluminium on Friday's trade in London, so about 6.5%, give or take. Again, I do say this a lot. I wrote an article about it today on Market Index. It was to do with China removing one of the export tax rebates that they have on semi-fabricated aluminium and copper products. And long story short, basically it does remove some global supply or retains that supply in China. Aluminium far more impacted because China was a bigger exporter, whereas it tended to be it tends to be a big importer of other copper products, and therefore some of that supply can be made up in other places. So big pop there on aluminium, a reasonable pop there on copper, but that chart is in big trouble anyway, or was in big trouble prior. We'll look at iron ore in a second elsewhere. Nickel turning down. So's lead, so's tin, and zinc got a little bit of a bounce there. But I think the general theme outside of aluminium, and that's a very much a news-related item, is that we are seeing some of that September China stimulus bullishness unwind. We are. That's what we are seeing. You can't really sugarcoat it. Let's head quickly to the lithium chart, where actually pretty solid day today. I think I've said it. I think the bottom is in here. Not calling the start of the next bull market. That's just silly. But we've got some sort of low for a while. What does a while mean? Well, it reminds me of what happened here, and it could be 3 months of not going down. As simple as that. 3 months of not going down, and I think that would actually probably be a pretty good case scenario. Look, until we turn that long-term downtrend ribbon, until we start to interact in there and put in some higher troughs and the like, breaking 88,300, which is the high there, then we're not really talking about the bullish case. We're more focused just on the not going down case. Let us head over to the what's this thing called over here? The TradingView screen, where we are going to kick off with silver because it's the chart on screen and it's also the bottom of that list, to work up the list. And I did mention this again in ChartWatch Evening Wrap, how we are at a key demand level there at the long-term uptrend ribbon. We're actually seeing the manifestation of excess demand at that ribbon. Why that ribbon? I don't know. That ribbon doesn't exist, ladies and gentlemen. It's not real. It's imaginary. It's a figment of my imagination and your imagination now that you use my ribbons. But lo and behold, once again, it just magically appears to be a place where excess demand starts to manifest itself in the market. And today's candle so far is starting to push off there. So we could get a little bit of a bounce here. I hope we get a bit of a bounce here, silver bulls. But we're going to be restricted potentially at about 31.70 by that short-term downtrend ribbon, and a whole heap of supply that's in there as well. And silver obviously getting tagged with gold. We've discussed the problems that are facing gold, at least in the short term. And lo and behold, the long-term uptrend ribbon also coming in there. Buy, hold, sell on gold and silver. It's equilibrium sort of stuff at the moment. I don't think, if we could talk in terms of risk position, I think you'd be 1/3 risk position at most on those charts at this point in time, because quite a bit of damage has been done to that short-term momentum there. Copper having some real problems. We saw a little bit of a bounce there in London. What was the most interesting thing about that move, I mean, seemingly good fundamental news, is that obviously London opens first, it got the news first, and then we opened in America, and we did get that white candle at the start, and you can see that big upwards pointing shadow here. I'm just trying to move off it so you can see it, but it's that one there. And the supply came in anyway. So what does that tell you when you get some positive fundamental news, you get some short covering, some speculative buying, and then by the end of the session, the supply side just came in and just smashed it down anyway. They are just waiting for any rally to sell. Any price that's better than the price they were getting yesterday is a good price as far as they're concerned. So that's a bit disturbing for me. On the copper front, we're going to find dynamic supply around 425-ish, and then you've got some other levels here as well. And we could be looking at a 389 or a 375 if we break, say, 398. It's going to look a bit ugly. A little bit of bounce today in iron ore, but, again, it just feels like it's just sliding a little bit or sideways at best without a whiff of this end-of-year seasonal rally that typically begins around about now, or probably more likely in a couple of weeks. The uranium chart has surprised me. I did not expect to see it turn up as sharply as that. So that's, almost what you call a V-shaped, sort of a rounding V. How about that? And V-shaped rallies tend to turn into bigger rallies. So they're far more credible as far as I'm concerned. So that is a credible rally there in uranium. Uranium bulls, you'll be very excited. You're probably very angry with me prior to me saying that, because I have called for really a few months now that the long-term trend here is turning, or has turned down, to be more accurate. It did take two pretty big fundamental news items, let's call them unexpected news items, to turn it around and to start to prove me wrong. Obviously, Trump got in and he said we're going to build reactors more reactors than anybody's ever built before, and I'm paraphrasing. And then, of course, we had the Russian ban on Friday of enriched uranium exports to the US, and that is turning this one up. So it'll be very interesting to see where it goes. If it starts to close above that long-term trend ribbon, we could be heading back up again on uranium. So uranium bulls start praying, I guess. Brent crude is very much stuck in the middle. Let me switch this back to candles so it'll make some sense to us all. Does it make any more sense to you by looking at that? Not really, because we are stuck in the middle. We've got really a zebra there, don't we? Sort of a sleeping zebra pattern overall between, say, the start of the year and right now. So very much sideways there. And the coal contracts are looking pretty similar there on thermal coal, very sideways, and also there on coking coal. So that is our tour de commodities. Let's head over and finish this whip around the grounds with a look at bond yields, starting off with long-term bond yields in the USA, creeping higher, disturbingly higher. I've said to you over the last couple of weeks, sideways is fine for us now. We've got that initial, we got the correction after the carry trade unwind in August, where people realised that the economy is not about to drop off a cliff. We're in a no-landing scenario, and that the Fed is not going to wholesale slash interest rates because the economy's in the toilet. It's just not going to happen. It's a no-landing, few rate cuts scenario. That's the reality. So we got catch up, and then we had the Trump win. That's inflationary. So it all kind of made sense, and that allowed stocks to keep going up, because typically stocks don't like it when yields go up, only under very specific circumstances, as we've discussed. But they're still creeping higher, and last week they went higher, and that's why stocks came down ultimately. And what caused it was our old friend Jerome Powell, who is making a special effort since the election result has become known to push back against this idea that you're going to get the Trump trade and interest rate cuts as well. He's kind of saying, look, you can't have both. You can't have your cake and eat it, and you might have to start to unfactor or factor out about 100 basis points, give or take, of interest rate hikes that you thought I was going to give you next year, because there's no reason to, and there isn't any reason to. Makes perfect sense. I'm not criticising him. He's doing his job. But that's not necessarily helpful for us over here in the bull market, where we want to see low volatility uptrends, as I suggested before. Let's head over to Australia. A bit of a mixed week there, a couple of down sessions until today, slightly up, but probably also explaining why we're actually not doing too bad, are we? Because our rates didn't push higher last week. And let's finish off in Japan, where we are seeing rates continue to grind higher, and there has to be, based upon that, another Japanese rate hike coming. I don't know when the next meeting is. I suspect it's not that far away, but looking at that chart, it's very much a live meeting, and that does worry me. Out of all the charts we've seen today, that's probably the most worrisome one that we should all keep an eye on. And I reckon that's it. So I don't know if that made you feel better about the world or worse about the world, that whip around the grounds, but better to be, to be forearmed with that knowledge, isn't it? To be forearmed is to be forewarned. Let us head over to the AMI broker screen, or back to the AMI broker screen, and we're going to get our Aussie stocks list going. And we might go here, and we're going to have a look at our first offline request today, which is a bit of a case study from Rebecca. And Rebecca is saying that she was on Nuix, as I'm sure many of you were, because it was in my, feature uptrends list so many times between, say, August and until probably that day here would have been the last time I featured it right there. So on that day there, my opinion is still plus 1/3. Because I assume that you haven't seen any of the prior updates. And that day there is the first day you've ever looked at my update, and it is a valid setup, and that's all that I care about every day I put them in. But no doubt, even if you did get on that day, there's still a method that we will follow, and that's what we're going to go through now. But I guess what I meant to say is that there were other opportunities before that, that no doubt, if you had been on it longer, that's where I was going. If you'd been on it longer than just that day, if you'd been on it that day, well, it's bad luck. But more than likely, there were other opportunities to trade. And I'm just putting the points where I think that one's fine. Pedigree, certainly there. These are all plus 1/3 for me, and you're kind of getting the picture here as to just how many possible opportunities there were to add risk onto this one, and even these. Let us now answer Rebecca's question. Could you have seen it coming? Could you have seen it coming? So that one actually is attached to there. No, you couldn't. You could not have seen this coming. There was nothing in that candle, assuming that this was our last valid entry. There's nothing in that candle. That's a perfectly fine candle. Downward pointing shadow. It's still demand side oriented, I'd suggest. That one is more supply side oriented, but it's tiny. It's irrelevant within the context of the whole uptrend. So nothing but FRP on that candle and on that candle. Even if we're blending these two candles together, they're so tiny in this rally. It doesn't matter. Short-term trend is incredible. Long-term trend is incredible. Price action's good. Even that candle, whilst indecisive, is nothing really to indicate this was coming next. And what is the next? The next was an AGM meeting. The managing director, CEO, gets up there, shuffles his papers. Coffee cups and teacups are clinking out in the audience as people are dipping their milk arrowroot biscuits that they got for free at the back of the room. And he starts telling people that, the trading conditions aren't as good as clearly analysts had factored in prior to him shuffling his papers. And analysts at the meeting, they're not eating milk arrowroot biscuits because they're sending messages back to the dealing desk to start selling Nuix shares. And you can't see that coming as a trader, as an investor, and you are then left with that candle. And Rebecca says that she watched it plummet on the open. I don't think you should be watching your stocks on the open anyway, unless you've got trades trade orders to enter and activate. But even then, try and get them done just before the open if you can, and then turn the screen off and come back. You can come back half an hour before the close and see what's going on, because you're pretty much at the end of the candle. You can do a little bit of analysis, adjust a few orders. You can make some exits in that last 10 minutes of trading. And I think that's all of the looking at your portfolio you need to do if you're on a daily chart. If you're on a weekly chart, you wouldn't do any of that at all. You might be just doing a little bit of work. It could be on a Friday afternoon or it could be on a Monday morning, and that's your extent of it, okay? You really shouldn't be looking at the market on an intraday basis because it's a complete waste of time, because my model, and if you're using my model, then also your model, is to look at candles on an end-of-day basis. Anyway, Rebecca said she chose to hold on to the end of the candle, which is actually the right course of action, Rebecca. If you're wondering, that's what I would have done. I would not have, she said there was a bit of a bounce intra-morning and she thought about selling but decided not to. That's irrelevant. Wait till the end of the candle, because we could find that the initial response is, I don't know, erroneous is not the right word, or it may be misinterpreted by the market. Better analysis is done and people realise that actually it's not as bad as they thought, or they don't care, they just want to buy the dip anyway, and we get this huge downward pointing shadow, and by the end of the day there's really nothing to worry about. It's still very much demand side, and if you had acted intraday when you weren't supposed to, you're kicking yourself. Having said that, there's also the possibility that you do act intraday and you avoid getting out at a much worse price. That's always a possibility, but you need to be consistent. You need to have a rule, and my rule is to wait till the end of the candle, and then you need to stick to it, okay? Otherwise, if you're random with your actions, you're going to get random results. If you're consistent, it's going to be consistent. Yeah, some are going to work, some are not going to work, but at least you've got some consistency. She said she would thought then to look at the next candle and see if there's a follow through or not in the selling, and that's a very sensible thing to do. If there is anything that resembles, because this is almost a species ending event, the only thing that saved it from being a complete species ending event, which is tune in at 10 minutes before the close and just exit your entire position. Do not go. Do not ask any questions. Just get out. That far, as in that much of a shadow away from a species ending event. So it probably therefore does deserve just to see if it follows through, and it didn't follow through in that candle, and it hasn't really followed through in that candle, and it hasn't really followed through in that candle, although you would hardly say that from here to here to here we're really getting that much better. So certainly we're not holding a full risk position here. Let's say, hypothetically speaking, you got in on that one, and that one, and you had a full risk position on that day, and for whatever reason you decided to add some more on that day, okay, right at the top here. And hypothetically speaking, right? Well, you even if you did dust 1/3 on that day, no complaints at all, no objections, but that's order of magnitude. It's not wholesale exit. On this day here, I don't think there's anything more to do. If you saw that day and you didn't like the close and you went another third, I've got no objections, and we're probably still holding that final third. And really, it's any candle that we don't like from here, and because what are we waiting for? What are we hoping for? Something massive has changed, and all this means is just trying to get a better price than what we could have got pretty much on that day. That's like your best case scenario, I think, here. Just trying to finagle a better price, but we've got one foot out the door. Whatever is not quite a whole of the other foot, because you don't have 3 feet, if you don't get where I'm going. Whatever that means, and there's still a third of a foot left. And anything that resembles, let's say, a supply side candle. So something that might look like this, and let's turn that like that. That would be your final. If you saw anything like that, then you'd go the final third. Okay, it doesn't have to close beneath here, although that is also an excellent reason to limit risk if for some reason that you got down there. See, I don't think you could get down there because you're bound to have a nasty candle you don't like before then. So just to quickly recap, could you have seen it coming, Rebecca? No, you couldn't have. That's trading. Sorry. Welcome to the world of trading. Unfortunately, this is going to happen to you. I can't sugarcoat it. I'm sorry if that doesn't make you feel better. Genuinely, I'm not trying to be facetious here. This is just part and parcel of the game, okay? We can't see the future, and that was an event that was news-related, not supply, demand, or chart transition-related, okay? Often we can see these things transitioning. We couldn't see this one coming. Second thing is taking some action on the day, but at the end of the day, assessing the closing candle, and I think it's enough at the end of the day to say, look, some risk has got to come out here. We've closed beneath, I didn't mention this, but this is should have. We've closed beneath here. We've closed beneath, looking for the next trough. Well, it's definitely there if there isn't something in there. We've closed beneath a couple of big demand side candles. At least a third on that day. If you did 2/3, I wouldn't mind. Okay, this is a common sense model. And then we get to this day here where we're starting to see, well, this momentum, which is great, where did it go? Like, why wasn't it following through? And this is a nothing day, and we're just really waiting for that next reason to get out. But as I said, look, if you got in sort of, I don't know, here, and here, the damage actually isn't that bad. Maybe that's where you lose your trade. Of course, if you got in at the end, as I alluded to before, then you're having a much different experience. Thanks, Rebecca, for bringing that to our attention. Hopefully, people got something out of that. If only that, be aware that this stuff can happen. Not just with trend following, with any model. I mean, you could have bought Nuix, you could have looked at the fundamentals and said, wow, Nuix is a great company because everybody told me it was. All the brokers had buys on it up to that point. And it went down. Okay, so it's not just a technical analysis thing. Adrian has got ING. ING, there we go, as an aggressive setup. Look, maybe. Yeah, it's certainly got some of the hallmarks of an aggressive setup. So we've got a little bit of a base pattern, a little bit. But the price action has turned quite attractive here. It's a strong push, white candles, shallow pullback, nice push through here. Volume's uninspiring though, isn't it? And I don't think you're going to see a huge amount of volume on a stock like Inghams. You're just going to see them on little tiny mining stocks where all of a sudden they're all the rage. So yeah, I can't really make heads or tails of that. What I can say is that we're probably close enough here to not have a lot of desire to do anything about it, but look, it's up to you. This is a major supply event. I'd prefer not to muck around with stocks that have had such a horrific supply event, such a species-ending event. They are more likely, in my opinion, to do something like that. So, look, I'm a pass. If you would like to have a go, I can see what you're looking at. And yes, at least you're getting in where there are some signs of excess demand in the short term. If I can suggest one little thing to you is that instead of going, plus 1/3, or if you're not using the 1/3 model, you're just buying and selling as you would otherwise do, maybe whatever it means to you, just doing a bit less risk. Okay, well, because it is an aggressive setup. Okay, it's definitely not a turnaround setup, not even close, and it's not a continuation setup. So I'd prefer to be really careful with that. And actually, I'd say I prefer not to do it at all. But if you were to do it, Adrian, I would prefer that you would be very careful with that one. I could be wrong. It could be the next best stock ever. But I'd also prefer if you looked more at these sorts of setups, because I think they're very good. And you know that I have put this one in that day, on 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 that day. And I expect many of you listening probably own it, if not from that day and that day also. So a bit like Nuix in many ways. I reckon I put it in on that day also. So 2, 4, 6, 8, 9 opportunities to get in. Some of you must have this stock right now and are probably quite interested in what I have to say. In fact, I'm pretty sure I put it on that day. I know it's going in tomorrow's update on that day, right? Okay, avert your eyes and ears for a second. Is it possible? You're going, Carl, don't do it. Don't do it. I know why you're doing it, but please don't. Is it possible that, the next candle ends up looking something like that? Of course it's possible. I hope it won't. And, there's nothing in the chart to suggest that it will, but we can't predict the future. I don't know what these guys do. That might surprise you as well for somebody who's put it in as a feature chart 11 times in the last 8 weeks. I don't have a clue what they do. So whatever it is they're doing, look at Resolute Gold, right? You've got to pay $160 million to the Mali government. Anything can happen. But I can't see it. So all I can say for you, Adrian, is that it is a continuation setup. You're absolutely correct. It is the most wonderful looking chart. All I can see is excess demand, and therefore all I can do is type on the screen FRP and plus 1/3 for that one. Thank you for your suggestion. I'm not sure if you require anything else out of that, because I think it's pretty self-explanatory. There's no sort of big case study explanation here required. Going to Mick now with HLO, which he's also put down aggressive setup. So thank you everybody who sent me offline requests, because you are now really good at putting in what type of setup you think it is, okay? So I look at this and I go, yes, I can see that you're going for an aggressive setup. However, I think you've misinterpreted what an aggressive setup is a little bit. All we've got here is just a short-term uptrend. That's literally all we have. We don't even have a green ribbon here yet, and I'm pretty sure we didn't have it quite yet on the other one. So I get, some people, hey, you like to buy stuff that's down and looks like it's rallying a bit, okay? But don't forget, like, that has from time to time looked like it was going to go back up and rally a little bit, and then you've got that one, and you've got, I could give you 100 examples of stuff that it looks like there were aggressive setups there. So just be careful. I'm not sure this one is it. If anything, I think this is just getting ready to set up for another continuation of the downtrend. The aggressive setup is more. It's had a long period of time, more than. I mean, where's the base pattern here? I mean, is that the base pattern? It's still going down through there. It's still black candles through there. It's had months of sideways movement, of churning through that supply that caused that big downtrend anyway, of demand actually starting to come back in, build up, displaying that in the volume, of having more control at certain times. So instead of just being all black candles, you're getting little patches of white candles or little patches of short-term uptrends and downtrends through that prolonged sideways period. And then you get maybe a volume push and a bunch of white candles and some really strong upward price volatility. A short-term trend ribbon turns green, at least waiting for that. I've talked about this many times. I don't expect you to memorize it, because there is nothing in text, is there? You just have to remember that video I did 3 weeks ago. So I'm happy to keep talking about it. I don't think this is an aggressive setup. There's still far more work that needs to be done. As I said, if anything, it's probably just setting up for the next rollover. I could be wrong. Let me look at this. There you go. There's one there. That's kind of what it looks like it's doing now, okay, if we're looking at patterns. When we find a bona fide aggressive setup, don't worry, I'll be the first one to tell you. And I think this is similar. I definitely saw this come up during the week, and I don't think I ran it, but I certainly paused on it and thought about what I'm going to do with it. So I do remember you asking me about this last week also, Mick, and then I definitely saw it on this candle, came up in the scans. This is now a turnaround play. Okay, so we're not requiring all that other aggressive setup stuff, because it has got itself above the long-term trend ribbon. The long-term trend ribbon is transitioning. It's found a different way to tell us that the demand side is taking over. But yeah, there's some decent volume. All the stuff I said last week. Not a lot's changed since last week. Really, all I'm waiting for here to confirm itself as a continuation, a turnaround setup, I should say, is the DINK. That's very important to me. So that is just seeing how the supply side responds, because not all of the supply side sort of gets the information at the same time or decides to act at the same time. They get this big push. Supply side, they're in from higher levels. They want out, or they're insiders and they want out. Let's see how they respond to this uptick. Yes, demand's come in. Who knows why? I mean, you can only fathom why somebody's now looking at Archer Materials and not the other 2,500 stocks in the ASX, if you get where I'm going. But they are, okay. So let's see how the supply side responds. Do they wholesale start selling again and saying, hey, this is amazing, thank goodness for this opportunity to get out at a half decent price and just whack it and wipe it out? Or do they have very little response? And that's interesting. Just think about that. Okay, yes, demand's come back in, but on that first pullback where supply could have really smashed it because they were just so nervous, they actually withheld because they thought, okay, there's something good happening here. And we're seeing that now, Mick. This is the DINK. Today's candle is not impressive. It's full and it's black, and it's reasonably sized compared to the white one that came before it. So let us give it another day or two. Let us see how it responds at this long-term trend ribbon. Let us see that ribbon act as dynamic demand. We're getting lower shadows. We're getting white candles coming in here. And then on the next push up, that's officially then, and only then does it become the continuation sub. This is still early for me, but certainly I think you can watch it. There are some positive continuation setup style traits here, but it's still too early for me. Okay, let's go to your third one, which is not early anymore, and in fact this is in tomorrow's list. Weebit Nano, one that has perplexed me. I talked last week about how much it has perplexed me. And the dink here is right here. That's your dink, that lower shadow coming in and holding well above the long-term uptrend ribbon. I'm going to turn this bloody dashed arrows off. I'm sure you've seen me turn it off today, but it never sticks for some reason. It's off now. So in here is the little dink, and today is the first really strong continuation candle out of that dink, because that one is not and that one is not. So it is today. And this is in tomorrow's list. I couldn't make myself run it as a feature. I know that's a bit of a cop-out because it is very strong. Today's candle is amazing. The volume's there. Something's going on. But I just held back, just on a tradecraft basis. And I know I say, oh, look, I don't do the tradecraft. That's for you to do. But, look, just looking at there's a little peak there. There's a few shadows here. I mean, that's where the supply is. That's where it's kicking in. So I just felt on a tradecraft basis, like it's very hard to see where you put your stop here, or where you're going to have to bail out if it turns around. Certainly somewhere beneath that candle, but there's no trough. There's no clear-cut trough. So I just, look, hey, it's gone in. So to answer your question, Mick, what do I think about it? I'll tell you what I think about it. FRP plus 1/3. Continue. What do I keep saying that? Turnaround setup. Hands down, bona fide. But I didn't run it as a feature. So that's my highest conviction list, because I'm just worried about that the proximity to that supply zone. Okay, won't be borne out in the watch list, but certainly will be borne out in our webinars. Let's go to Peter FND, which is still looking very good. I ran it also in the 1/3 list. It didn't make the feature, Peter, only because of that tiny little shadow, and that's me being a bit pedantic, because it still looks very good, but 100% made the broader shortlist. And I suggest to you the last time it made a feature would have been here, no doubt about it. I'm sure of it. Go check the relevant article on Market Index, but I know what I do. I'm consistent in what I do, and I know that would have been a plus 1/3 there. Another very good chart, and we can again relate this back to Nuix. Nuix looked this good, and I'm not saying that what happened to Nuix is going to happen to this one. Eventually, they'll all turn down at some stage. I'm just saying you can't beat yourself up over Nuix because you couldn't have seen that one coming. Let's go to WA1, and I'm a little bit worried about this one because Peter's gone the aggressive setup. I've never seen so many offline requests use the word aggressive in there, and I think you used it a little bit incorrectly. I don't see an aggressive setup here between you and me, because we should at least have a short-term uptrend, okay? So I know I haven't written anything down, but I've certainly said this to you many, many times. We should at least have a short-term uptrend. We should at least see that green short-term ribbon. It's not green, and therefore it's not aggressive setup. What we do have is a bit of a base pattern. I guess if we sort of factor this out, it has been basing for a while. But the way I look at this is it's very 50-50. I mean, this is a base. Potentially, I see it to continue that move, okay? And that's just my gut feel at this point in time. I've been running it in my my downtrends list for a while now. It's come back a little bit, but I'm still quite sceptical about this one. What could make me less sceptical? Because I guess there's some people out there that probably know the story on this one. Is it niobium, dare I say? Oh, that just gets my heart all aflutter, just saying it. High troughs, certainly. Strong white candles. It's going to take a little bit of work. I'd say it's that, and then that is probably going to do it. Because I want to see what the supply side response is going to be just around here. Okay, just in there, just around there. And when I feel, when I've got the confidence that it's really standing up to that zone, then I'm going to be more likely to want to have a crack at this one. So I still think it needs a bit more cooking from me. But obviously you wonderful people out there can do anything you want to do, okay? But for me, this is not aggressive setup, not even close. Tony wants RZI. So let's have a look at that one. Raiz, okay. I can't see much. I'm just going to go normal zoom there. It is in the turnaround sort of setup of possibilities. So being aggressive, turnaround and continuation. But there's really nothing there apart from the fact it's above the long-term trend ribbon. The long-term trend ribbon does appear to be supporting to go on. There's really very little else. So little studies there. In fact, the last time, I might be able to put that back. So the last time we said FRP plus 1/3. Okay, so that was here. And I would put to you, I would suggest probably on that candle there, because on that candle there, yeah, look, I think you could have made a case for it to, good, yeah, I only wanted that. So I'm just going to move that away so you can see what you would have seen on that date to explain why I might have said that. I won't delete all studies, but I want to keep that. So let me get rid of some of these, and I want to show you what it would have looked like as pretty much a clean chart, right? So let's say that's the day we're doing the analysis, and we would say, go away. There we go. Oh yeah, I mean, it looks very different now, doesn't it? It's a very different looking chart, obviously to today. We've got some decent price action coming in. We've got a short-term uptrend. We've got the long-term trend ribbon transitioning and also acting as an area of dynamic demand. This is different to this and this. It's different. Different is good. Volume and interest. And that's why on that day, I 100% would have gone FRP, okay? Now here's a news flash. Not everything I say or do is going to turn out to be correct. I don't know if you've noticed. Okay, I'm sure you have. But it turns out that I would say by there, you are really struggling to hold on to this one. That would be my suggestion. By that one there. Okay, so we've got, two closes, two ugly candles, two closes beneath the short-term trend ribbon, a lower peak being formed. I think at least getting out a third. I'm probably 2/3 here. Cluster of black candles. Oh, it's a hold at best, and that's where we are right now. I think if we were order of magnitude the FRP over there, then I think you are ZRP here, or at most a 1/3, not a plus 1/3, but 1/3 risk position, as in remaining, I think, is at most on this one, simply because it's just hard to justify waiting in something that has just such a little display, such a minimal display of demand side control. And if you are on that third, it's because you are a true believer in this thing, and for no other reason. There could be no other reason. Let's go to Brendan, who's got SXE, which tried to bounce a day. I think this one, if we think again of setups, is it a turnaround setup? Not really. No. For it to be a turnaround setup, it would need to have a dink, so show some supply side response, turn that short-term trend ribbon into an area of dynamic demand, some nice white candles, and then it could start to look interesting. But even then, there's just a lot of supply here to deal with, so it would not be my preference or desire to do that. It's still too early for me. It's not an aggressive setup because that's just irrelevant at this stage, and it's certainly not a continuation setup. So early stage turnaround is the best we can do here. But I think this has got some bigger problems. Look, I like today's candle, don't get me wrong. This and this and these three candles are actually very impressive. The volume's impressive, but yeah, still think there's plenty of work to do here. No comment from Brendan as to why he wanted to look at that one. So just a little bit of an explanation of what you're thinking would be good. Where would I be? Well, you would have been, I'll just use some arrows. I think certainly a third there. I don't think you could have held a full risk position after that day. I think that's pretty close to a second, third, if not certainly that. And then I think you're zero risk position by there. I just can't see a case. There's no justification with these lower peaks, those demand side candles, the flattening of the trends. I just can't see any reason to be in any position after that bar there. That's just me. And therefore, we're still zero risk position, and really only until we sort of in here somewhere could we start adding risk back. Okay, that's all the offline requests. Let us do now your online requests. I'll double check there are no technical issues in the request list, and there isn't. Thank you for hanging around. FCL from Robert, let's go. Another strong performance. These are the most frustrating charts for me. Let me tell you where, something really has been quite awful for such a long time, almost would have said it was a very strong short trade there. And then there's a bit of news, a bit of fundamentals that comes in, and we just see this huge white wall of candles, and it's short covering. It's you've got to think the only way you get a chart like this is if there was some substantial short side involvement. And I think step one in responding to whatever news has caused this is the shorts get out. Compounding that, there's some speculative buying, and then there's probably also some positional buying now, because this is more than just short covering here. I'm not sure what turnaround play Robert is asking. Yes, it is moved into the realms of turnaround play, so you're correct in that assumption. We do have a short-term uptrend ribbon. We do have a transitioning long-term trend ribbon. We're above it. What we are obviously lacking still, however, is the dink. So we need any sort of supply-side response just to see how that plays out. We can see in the past rallies very similar in ultimately what was, still a bear market ultimately. And how did the supply side respond? Well, it responded like that, and then it got reinforced and reinforced and reinforced. Okay, supply side response. The big question mark now for me is simply, how does the supply side respond? And we won't know until it does. We haven't seen any response in the last 1, 2, 3, 4 candles. We're still scrambling to get any stock we can get. The other problem is that even when supply side does respond, we've got a pretty decent, for me, area here where that's a pretty major point of supply here, and it could well cause some issues down the track. So it's interesting. It's like Weebit. There's more upside. Don't forget in Weebit's before Weebit hits its major point of supply. But I'm probably not there yet. And I'll be honest, I'm probably not going to get there either, just given where that the proximity to that point of supply. Okay, but never say never. If I change my mind, it'll be in the watch list, won't it? But I absolutely, Robert, I have seen what you've seen. It's back in my scans for all the reasons we've discussed. My scans are designed to pick these up, and I have considered it, and it's not making the list for the reasons that I have just given you. But it's good to see that you're seeing these things as well, at least. Perry's got a couple of ASX stocks for us. SGI actually looks very good. Yeah, I like that one. Last time we looked at Stealth Group, it's been going up in stealth and under my radar, because we can see here the minimum turnover filter is still 0. Just means it's a less liquid stock. Doesn't mean it's a bad stock. Just means it doesn't meet my minimum turnover requirements. But we have obviously looked at it here. Probably Perry brought it to our attention that time as well. I've got nothing else to do but continue to say full risk position, and even on today's last candle with a gap up. I love gaps. I love full white candles, and it's actually traded. It's actually got a pulse with a bit of volume there as well, and a gap, the hold, the close of the high. It's impeccable. And when I zoom out, I'm probably not going to see anything to worry me, and I'm not, so that makes it even better. So certainly full risk position plus 1/3 on that one. Just understand, with the less liquid companies, if somebody gets out or presses the button in the wrong way and too many shares at once, a market order instead of a limit order, you can get some volatility. That can be a bit frightening, but that's kind of the extent of it. Everything else still works. If If demand is greater than supply, price is going to go up and vice versa. Okay, let's go to MHK, which is Perry's second one. Actually, very similar. These are the charts I love to trade. These, don't get me wrong, these are places you want to be. And even when they are liquid, sometimes they can work in your favour because the little bit of demand, there's just no supply. Just a complete vacuum of supply, and therefore prices can move quickly. I think this looks wonderful. I wish it had been coming up in my scans because it would have featured in them heavily. But yeah, no complaints at all for me. Happy holder on it if you have it, and also if you don't, I still think you can add risk to this one. And we did talk about one of those, what should we call the setup, the Hail Mary setup perhaps, the ones that are just going vertical, and I say, look, just Hail Mary trade, put a little bit of risk on it and see how you go, and just if only to help train yourself that you can prosper from these types of setups. So I just want to check if the turnover filter ever fired. I'm just looking to see if that ever goes to 1, and I don't think it has, because it kind of rings a bell. So I'm wondering if I had seen it in my scan list. I have it. So there you go. Perry looks great. Let's go FRP plus 1/3 on that one. I will zoom out just to double check though, to make sure we're not about to hit any major points of supply. We're not. It's all very fluid up here. So really, it won't be until, funnily enough, about $1 until I have any major issue with that one. And I'm going to say it looks even better on that chart also. Thanks, Perry. Let's go to J Hood. I'm not sure what the J stands for. Josh or John. OBM dropped with gold and then found support. Yeah, a lot of those gold stocks fell away, and you had to act quickly. Otherwise, you gave up a bit, unfortunately. But unfortunately, when things move that quickly, there often aren't great cues to manage your risk on. There are some here though. There are some here, and I think between you and me, and I wonder how you feel about that candle there. How does that feel to you? Also note that there is a little trough here, okay, and we didn't close beneath it on this one. Okay, there's a little lower peak here as well. Okay, so if we go point of supply and point of supply, this candle here is not a deal breaker. It's probably, now that I can see that we've had a little trough here, it's probably even this candle here as your first third, but certainly this candle here. I don't think you can hold a full risk position past that candle. Okay. If you were that way inclined and you wanted to go minus 1/3 there and minus 1/3 there, I have no problems with that. And I would encourage you then to hold on to a third, because the rest of the trend is fantastic. So acting quickly, acting decisively, but also keeping a little bit of skin in the game, just in case it's just one of those things, I think the final third is here. What do you think? What does your eye say? You've been applying my model for a while now. You've been listening to me speak on Monday nights. Is that the candle where your final third goes? Where you say, look, I really can't see demand side control anymore. All I can see now, in the short term, certainly, look, long term, okay. But I'm convinced that we are now seeing supply side control in that candle. Is that what your brain's saying? If it's not, that's okay too. All right, but that's how I'm viewing that. So I want to just tune your eye into what you want to see there. Okay, so we're zero risk position at this point in time if we're following the model correctly. There's nothing here to. Okay, so now we want to say all I can see is demand side control, and we're adding risk back in, and I can't see that. So I think we can just quite happily and definitively say ZRP and just leave it at that. Is that okay? Let's go to Tony, and Tony has RZI, which we did. Different Robert has, hi Carl, whether to add risk to LRV, Larvotto. Okay, let's have a look at that one. Have looked at that one for a little while, and we're saying, again, it's a gold stock, right? So we're having some problems. Okay, let's get rid of these, because, and this is what's really neat. That's why I like doing these sessions, is each week there's a theme, isn't there? And I think today's theme, given the circumstances of the pullback in many stocks that were so hot, is, well, how do I know when to get out? How do I know to take some risk off the table? What sort of candles should I be looking for? That's the one that stands out to me. I'm hoping that's the one that really stands out to you as well, okay? Now, whether you did something on that day or not, I don't think it matters. At the end of the day, tuning in, 10 minutes to go, or on the open here, I don't think it matters. But that's the one that gets my attention. That's the one that says, we're not all right here, okay? That's really the first one. I mean, this is not great, and actually that's not great either, but, you know, it didn't really challenge any sort of demand side areas. And I'm talking sort of the bottom of that candle, the top of that candle, and it came back so quick. So, look, yes, I can see that, but it's so quick. This one here, for me, let me just get rid of some of these. I'll tell you why that's the one that's concerning me. Is we're seeing this is the reach. See these shadows? And then this one, we pulled back, we tried to go, and then we reached up, we found the supply. So that's the one there I think is important. Personally, I wouldn't have got out on that day, but this is the day then where I think the action needs to take place because everything's confirmed now. So that's the -1/3 for me. Where's the next third? This day here is fine. So that one's fine. That one's okay. On that day, I'm actually probably quite annoyed that I was so nervous and got out the day before. Okay. By this day here, I'm thinking actually, I'm okay with it. I'm actually quite at peace with that action. And this day here, I'm thinking, well, I've got no choice. There's not only did I do the right thing, but I have to go at -1/3. And yes, I'm almost an extra third there, closing beneath the short-term trend ribbon, a really awful candle, setting now another lower peak. Certainly there's a peak, well, that's an outside. This is wild price action, but I would say there's definitely at least a peak in there, if not two, and lower troughs. So whether we're still holding a third, that's up to you. It's questionable. I would say at most you are 1/3, not +1/3, but a 1/3 risk position here, only on the basis that you want to see how this long-term trend plays out. Would I add back on today's candle? I don't think we've done enough to equate the supply side control that's been exhibited here. So if we're seeing lower peaks, lower troughs, we want to see higher peaks, higher troughs. Okay, so at least a dink heading back up. If we've seen nasty candles like this and like this, okay, well, I've got one good one. Let me see at least another good one, at least as good as this one is bad. Okay, let me at least balance out or show that I'm balancing out the bad stuff that's happened here, and we're not there yet. Okay, so either 1/3 risk position that you still got hanging in there, or out, depending on how you would have interpreted that. It's not the simplest price action, let me tell you. And then waiting potentially. Today's a great sign, and I hope that it heads back up, and you're adding risk back on this one. But I don't think you've got a full risk position right now. Let's go to YRL, which actually had a really good day today. What could we have done with this? Are there any really frightening candles in there? Nothing that really is standing out by itself, is it? Putting a couple of candles together, those two aren't great together, but they're still pretty small. That one's not great, but it's still pretty small. And this is tough. This is tough when you get these pullbacks with really non-specific, like they're bearish, but they're not that bad. And maybe that's a sign, that's a message that just see how we go. So I think it's probably still full risk position here. I don't know if we're adding on this day. I didn't put it in the list tonight. I did look at this one. Make no mistake, I saw this. I thought about it, and I just came to the conclusion that little shadow at the end there was just enough to keep it out of a +1/3. But I can certainly say, if you've got it, an FRP. It's definitely an FRP at this stage, full risk position. And we're going to Robert's third one, which is POL, which again, a little bit like the last one, there's no one candle in itself that's so awful. A little bit of a lower shadow there, a big lower shadow there, not so bad. That's the tough candle. And if you did, if you did go -1/3 on that candle, I wouldn't argue. If you didn't, I wouldn't argue either, because we're still above that. That's the last trough. That is the last trough. So we're still above that. We're still above the short-term uptrend ribbon. So if you did that, no complaints. If you didn't do it, no complaints. Either way, what's going to happen now is you're really waiting for this. So if you see this, there can be no confusion, okay? Based upon my model, you do whatever it is that you want to do, of course, but that would be the deal breaker for me, and I would put to you that a candle like that would be at least 2/3 out, and maybe the last third might occur beneath there if you were going to wait that long. But for now, it's okay. I can hold a full risk position or 2/3 depending on how you're feeling, but we are seeing some issues here. There are some issues coming in. We are not in that strong demand side market that we were in not that long ago. Okay, that candle's not there, right? It's not there, not yet. But be aware that it can occur. But I'll leave it there for next time. Let's go to Nicola. Okay, Nicola, we'll come back to you because you've got a US stock. We'll do those US stocks at the end, given that we are at 8:08 local time. We will stop putting in new ones, please. I'll stop doing them. Thank you. Go to Stephen. Palladium change of 2-hour 20 EMA. Change of trend looking nice. Your thoughts? Palladium. Okay, Palladium. Let's go to here and see if I can find the Palladium chart. Palladium, which one should we use? Palladium futures, front month, perhaps back adjusted. Now, let me understand this. Change of 2-hour 20 EMA, change of trend looking nice. Stephen, you're going to have to give me more than that because I really don't understand what you're saying here. I'm in Palladium. I'm not seeing anything here on the daily chart, and I'm loath to go to the 2-hour chart if that's where you're sending me. Okay, I don't think we want to go there, do we? What's there? I can't see anything there. I can see a bounce in a downtrend. That's in a major, well, it's not a major downtrend. It's just a sideways trend. So I'm not sure what you mean there. So give me some more information. Let's go to the next one here, which is from San. Hello, San. San's actually got some US stocks, so we'll do those later. Francine asking for Orica. Can we look at that one? Certainly can. Let's zoom out. Wow, what a crazy chart. We haven't looked at this one for a while, clearly. The last time I did look at it was around here where we said FRP plus 1/3. I'm guessing on that candle there, because that's the only candle. That's the only candle out of all of those that could possibly warrant an FRP plus 1/3. There you go. It has to be. Let me just put it here so I can point to the candle. That is the only candle. Because the rest of it is chop. We talked about the zebra sleeping. This zebra is in a coma. White, black, sideways. Little bit of volume coming in at the end. Yes, stringing together some white candles. Yes, there's a bit of a gap up, and it seems to be holding that gap. So probably some news, an AGM perhaps, a trading update. So better than average. Short-term trend maybe turning up. Long-term trend is still up. But where's the trend? Look, I can see a path to owning it. Certainly FRP, today's candle is not a plus 1/3 in my opinion. I'm a little bit concerned, and only a tiny bit concerned by that upper shadow, but the upper shadow is manifesting itself at a point where we would expect to see some supply. The big issue for me, the elephant in the room, I know we're using elephants and zebras now, is really that major point of supply there. We're not far away from it. And we're probably not far away from a plus 1/3 on this one. It's probably more like a high close, a decent high close in here. So let me put it in. I'm happy to do it. You might even see it in the watch list. I think it's more of a 1/3. I don't think it's going to make a feature simply because the price action is so overlappy here. It's hard to see that the leopard is going to change its spots. We're going right around the savannah now. But let's go next high close. Dare I say plus 1/3, even though I honestly, I won't be doing it with my money. But some people, I don't know, might like Orica for that reason. For some reason, it's a very tough chart for me to analyse. Let's go to Haraju, who's got AMP. Now, this actually made the shortlist today and the feature list because we do have a really strong candle there at the end within a very, very strong short-term uptrend and now long-term uptrend. The price action is a little bit wonky in that, what have we got here? A little bit of a peak trough in there. But I think I can forgive that. It's a very small little fluctuation. I think the broader fluctuation is that that trough, this trough coming in here, is at or above that demand side candle there, that strong demand side showing. So we're seeing that area of demand, the historical area of demand, acting as a future demand and pushing prices high. That's obviously a point of supply that's of some concern, but the emphatic close today within the proximity of that, and that suggests to me that we're not too worried about it anymore. I do think you need to go back and double check to see if there's anything, because this is definitely not blue sky here. If there's anything that could warrant some pause, some cause for concern, and given that that is still a ways away, I don't think that's it. Maybe there's one here, but we're talking about a few years ago now, so they're starting to get pretty old. And if you're sort of still holding on in hope, based around hanging in there for that long, I think, yeah, much of that supply has probably worked its way into the market. But even so, there's actually not a lot until you get into the 180s. And if we go back to the daily chart, we're at 155, and with stops sort of under here, and sort of a last resort there. 15 cents gets us into 170, doesn't it? So I think we're fine as well on the tradecraft aspect. So very happy with that one, Haraju. Let me write on the screen for you, FRP and plus 1/3, and just add that has made a feature chart for tomorrow. Thank you. Let's go to your second one, which we have coincidentally done YRL. I said I considered it very carefully today. Nearly put it in the 1/3 list. It was never going to make the feature, and the reason why it was never going to make the feature is these oddball candles I talked about, supply side candles, very consistent, very, very motivated in many ways, but still modest within the context. But it wouldn't have made a feature because I need to see at least that sort of undone. High close today might have undone it. But we'll never know. Let's see tomorrow. Next high close. Yes, I think you're looking at that very, very seriously for adding some risk. Let's go to Smart Parking from James, SPZ, which is still fine. Oh, okay. I didn't notice. Again, don't forget, I don't spend a lot of time doing the tradecraft when I create the list. That is your department. Okay, I don't have time to do all of it for you. But yes, I'm only just noticing now because I don't often look here. I often just look at the picture and then make the charts and upload them to the site. But I'm now noticing very clearly here it's jumping out at me. Because I look at this candle, I go, oh, okay, some supply kicked in around the highs. And is there any reason why that might have occurred? And then I look up and I see that coming in. So the high today was 97. That's within that sort of, 5% sort of range, isn't it? Certainly. And I think if you had a minus 1/3 up there at 95 cents or so, 96 cents, I don't think you would have been doing anything untoward at all. I think you're minus 1/3 there on the round number. And then seeing how you go on the rest, it also means that we are 100% plus 2/3 here, risk position, and very much happy to hold on to that. Obviously not adding risk on that last candle because it's got an upper shadow and it's into $1, but certainly happy to hold the 2/3 there on Smart Parking. Perry's got some US stocks. Matthew's got some US stocks, which we are going to do now because we're at the bottom of the list. So let's head over to the TradingView screen and work our way back up. Going first of all to the offline requests, and there's just a couple here. Tesla, first of all, and this one is from Peter. Thank you, Peter. A little bit of a pullback, not dissimilar at all to what we saw in the Nasdaq last week. The old supply zone there, I'm guessing because I've drawn it in the past. Let's have a look. The old supply zone appears now to be acting as a demand zone. We can see in Friday's candle. Okay, so that's healthy. We do want to see, as I said, a pretty quick resolution tonight. Nice white candle and or lower shadow, holding the zone, pushing back up, and I think we're fine here. We're hunky-dory. None of these candles in isolation. I've said that plenty of times tonight, haven't I? none of them individually. That candle's the worst one, but within the context of the broader trend is okay. When you blend them all together, they start to look a bit more nasty, and there is a bit of a sharp reversal here. But I think still deserves the benefit of the doubt, because overall, yes, the short-term trend and the long-term trends are up. So bottom line, I'm still FRP here. Alert, not alarmed, looking for lower peaks potentially, looking for big black candles that could eclipse what was a very fledgling bounce on Friday. And if that was to occur, then maybe taking a third, and that's all we're talking about. That's just all we're talking about here. Still hanging in and trusting the trend. But still FRP for now. For you there. Peter, Perry's US stocks from last week. Sorry I didn't get to these, Perry, but I did want to have a quick look at them for you. I'm guessing that's not the right one. I did probably just mistyped it. ONOK, there we go. Try that again. That makes more sense. So it's a shame I didn't get to them last week, Perry. There were just so many, as you know, it was such a wild session last week. So many requests in my list. I just didn't see it. So apologies for that. And I wish I did, because I think, listeners probably would have done pretty well out of them. I guess, that's the 11th of November, so we would have had that candle there. So, up a little bit, not too late. That's good. We're not too late on that one. Looks wonderful, and if I go to the weekly chart there, it's still amazing. No complaints at all. And we are seeing, again, I love going from Australia to America, because I feel like I'm in the trenches, aren't I, with sleeping zebras in comas, leopards who don't chase their spots in Orica, and charts that look like that. And then, such a breath of fresh air. We get to America, we get wonderful charts like this, which are the epitome of excess demand. So, Perry, thank you. Belated, and we're going to go FRP. And also plus 1/3, certainly relevant this week. And I'll do your other ones from last week very quickly. We're going to do UTI, which has a very different meaning in medical terminology, doesn't it, UTI? Universal Technical Institute is what it means here. My wife is in the medical field, so some of these terms do come home. She deals with stuff like that. And now we have to do this. I have to get refocused now onto this UTI, and it is okay. It is okay, but it is having a little bit of a pullback here. And it needs to hold, I think, that short-term uptrend ribbon. Don't know what you did with it last week, Perry, but it's fine. I don't think I would take any steps just at this stage and just trust the trend. So look, we'll just keep it short and sweet and go FRP at this stage. Obviously, lower peaks, I'd be concerned. Bigger black candles, but this big gap is the key here. And as long as we don't interact with that gap and stay above the short-term trend ribbon, I think we're fine. And your third one there, NN. NextNav. Oh, that was a wild week on NextNav, wasn't it? And I don't think we want to do much with this now. And if you have done it, then I think just taking a little bit of risk off the table, just on the basis of that huge upper shadow and a couple of black candles, I think you're in a sideways at best for a couple of weeks scenario here, just to work through the craziness and the indecisiveness of that supply there. At best. At worst, it could pull back to the short-term uptrend. So just avoiding that one for now. And that's it. That's all the offline requests. Going to get into Matthew's online requests for the USAT PB. Turning Point Brands. Wonderful. Looks great. I don't think I'm going to add risk tonight just on the basis of that little upper shadow. We're looking for high closes. But if you're on this one, then absolutely no complaints. FRP. No reason to do anything but hang on to every single share that you've got on that one. That's my opinion. And then WRBY, try again. Warby Parker. I just love some of these names. You can imagine the company's probably been around for 80 years. Warby, Mr. Warby and Mr. Parker. Let's go to the weekly chart, because I want to see what's going on back here. Actually, it hasn't been around that long, or it hasn't been on TradingView for that long. Nothing really to worry about until we get into the mid-30s, so that's fine. We're nowhere near that, so we don't have to worry about any upside supply points. And otherwise, all I can see is a very strong short-term uptrend, an increasingly well-established long-term uptrend. Some really good price action. You know, I love big trough to peak moves followed by very shallow trough to peak moves followed by very shallow peak to trough moves. Let me say it again because it's really important. Write this down somewhere. I love big trough to peak moves followed by very shallow peak to trough moves, okay? It all comes back to that second, last trough is at or above our second from last peak. Okay, that's good price action. Great moves on the extensions, lots of excess demand, and then very shallow, very mild supply side responses. There's no reason to add a third just on these last candles, but next high close, certainly. And I probably should have written that on the last one. So FRP, next high close for +1/3. And click save on that one. And thank you for those, Matthew. Going to Perry's stocks for this week, WFC, Wells Fargo and Company, just like our banks over here. And if you look at some of the US banks, certainly they've been deemed as Trump trade winners. But you look at something like a JPM, JP Morgan, and Wells Fargo, two of the biggest banks, of course. They kind of remind you of our bank stocks as well, Commonwealth Bank, ANZ, Westpac, NAB. Don't they? Very similar. So probably makes a little bit of sense as to why our banks are going well. They've been sort of caught up with these big US banks. Citigroup's another one that we could look at. Probably not as strong, potentially, as our Wells Fargo corporation, or company, I should say. But I think JP Morgan, Wells Fargo, definitely the two banks, US banks there, are the ones we've looked at. And certainly FRP +1/3. And that one is good to go because we do have the high close. If you're wondering what the high close is that we're wanting, that's it. I love the gap. I love the run. And I actually should, I've just gone to settings here because thank you. I can't remember who it was that sent me the email, but thank you to whoever it was, showed me how to do the dividends. We can put earnings on as well. Let's get rid of key facts for today because I really don't care. And that's how you do it. So you right click, settings, and then you go to events and you can turn on whatever of those options you wish. And you can see where the dividends are, and it tells you how big the dividend is, the amount, 40 cents. And if you click the adjust button, in theory, it should add the dividend back to the price. And that's what I was talking about before. Okay, so that's quite a neat little trick. I'm still playing with it. I don't believe it 100% because the testing I did before tonight's session suggests that something a bit weird's going on. And whether TradingView's interpretation of adding back dividends is the same as mine, I'm not sure. But either way, that's how you do it. And I think that's a very nice looking chart. So let's click save on that one. We're going to go to Perry's second one, which is AIZ, which, if I'm not mistaken, is also another financial services company. They're Assurant. It looks just as good as the last one. Let me double check in the past there that we're all blue sky, and we certainly are. So this is looking very, very good as well, Perry. And I'm going to go FRP and +1/3 on that one also. And yes, it looks very good. Two of the best trend, or best chart setups, two of the best trends and best chart setups I've seen all night. Thank you, Perry. And I'm sure your third one is going to be no different. Palantir Technologies, very different from the last two we looked at. This is the artificial intelligence company, and looks wonderful. We obviously did look at this one last week. So all I need to do is copy and paste on that one and click save, because that candle there from Friday looks absolutely amazing. I know it's exponential. If you look at this and you go, wow, that's a bit too much for me. You know, I like trend following. You've converted me, Carl, but that I'm not sure if I'm there yet. This could be the Hail Mary one that you do. Okay, just get a bit of skin in the game, buy a few shares, and just see how it goes. Thank you very much, Perry. Let's head up the list to Sand, who had some US stocks for us as well. RDDT, Reddit. I'm sure many of you use Reddit. Very good trend overall. A little bit of a pullback more recently. It has actually moved into lower peaks and lower troughs. If you're this way inclined, you might want to just take a third off the table and go put that into Palantir. Okay, just trying to keep the capital where it's going to be, finding the most momentum. This is not a terrible chart. It's certainly a have some skin in the game chart, but it's not an add risk chart at this stage, simply because, if you haven't noticed, we are in this lower peaks and lower troughs face at the moment. Friday's candle, not great. And Friday's candle confirming really this big supply candle here in at 140-ish. Together and with the price action, yes, I can see every reason for minus a third on that basis. I think that is exactly what the model prescribes, which means you're still plus 2/3 at this stage. Okay, and just looking for other signals potentially to de-weight, but hoping that they don't occur, and there's every chance they don't. Thank you for that one, Sam. Let's go to TOST, which I'm pretty sure we did last week as well. Toast Inc. Still going well. Certainly an FRP. Not going to add another third, I think, at this stage. I think you've got enough risk there, just on the basis of the upper shadow there on Friday, but still a very strong chart, holding up very well, all things considered. Don't forget we started out this presentation an hour and 27 minutes ago, my gosh, talking about 4 big black candles last week. So, that should put that into perspective. It's very, very strong. TWLO, Twilio, which I think we also looked at last week. Well, there you go, $100. So I'm sure you did this, Sam. No doubt. I can trust you. You've taken a third off the table, which means you're still plus 2/3. Okay. And happy to see where that goes for now. Obviously watching for lower peaks, etc., and confirming candles of the supply at $100. If you haven't done the minus a third, I don't think it's too late. You're probably kicking yourself a little bit, probably saying, I knew it, I knew I forgot something, or I should have done it, but no, I don't think it's too late. I think if you haven't done it, and you should have done it, then do it. If there's every reason still to do it. Because if it finished with a big white candle and you didn't do it, and you say, oh, I got a bit lucky there, but there is a black candle there. We are manifesting supply at that key round number. Okay, Spider Select Sector Fund Financials. Ooh, okay, this is interesting because it's now reflecting many of those big bank stocks that we talked about earlier on. Yes, it's looking very good. I think we can do better than the sector. I think there are stocks outperforming the sector and maybe seeking out some of those instead. So not that you knew we were going to look at those individual stocks, Sam, but that's no doubt relevant for you. Let us go to Nicola's RKLB now, which is Rocket Lab. Oh, okay. Interesting. I wonder if that's the first time we've been at $20, because $20 is a round number. 10, 20 is a round number. I think 50 is probably the next one. It's not the first time we've been there, but we had problems there before. So if it's a major point of supply in the past, like we couldn't get through 20, and we haven't conquered it, I think there's every reason to minus a third here. And again, if you haven't done it, I don't think it's too late. I know this candle's still pretty good, but I'd almost seriously consider catching up to it, or just waiting for the next signal of any supply at $20 and just putting that in the bank, if you get what I mean. It's a tricky one. It's a tricky one, isn't it? Like, that's a massive supply candle at a major point of supply, historical point of supply, and a major round number, followed through, and then bang, Friday just comes straight back up. Not something you see every day after a massive gap in an exponential move that we actually have had some history on here. So very proud to say that the last time we looked at it, we said FRP. Oh, I have to think about this. I'm going to say, I reckon I'm caught between do the 1/3 immediately, because that's what we should have done. But you might have done it. It's a moot point, and I'm just talking to myself because you already did it and you've got 2/3. Let's assume that. That's easier for me, isn't it? Let's assume you did the third because that's your job, and now you've got the plus 2/3. If that's the case, then it's very easy. We're just holding our plus 2/3. I'm not adding risk today because I think that shadow still needs to be dealt with, and Friday's candle, whilst very impressive, it has not done enough to deal with it. So let's do that. In brackets, if you hadn't done the third, should you do the third tonight? I'm torn because it is a white candle, but I'd be looking at anything that even resembles a supply side candle as a reason to catch it up. Let's go to, actually, Nicola, I should probably read the rest of the question. Would have taken a third off Thursday. Would it? Okay. Would have, what does that mean? You would have, but you, so you're also sort of case studying it. You're not, I assumed you had it. So it sounds like you're case studying it as well. Let me know if you're case studying it or you did have it and you forgot to do the third. That's what I want to know, Nicola. Would have taken a third off Thursday, but would you add it back again tonight? So the answer is no. I've definitively answered that. I'm not adding it back on Friday's candle because this is more negativity than this is positivity just at this stage. So I need a bit more of an upwards push to be adding. But the question I have for you is, did you take the third off the table? As you correctly have identified, there would have been a requirement to do so. Nicola asking also about Disney, so let's have a look at Disney now. Oh, look at these shadows. Very rare. These are very rare two candle patterns, Nicola, where you get this big upward pointing shadow and the next day a full white candle eclipsing that whole shadow. But it is a really, really strong demand side showing because ordinarily that's quite bearish. And for everything that is bearish, this is more than bullish, and it just puts all of the bears, all of the supply side, all of the doubters on the wrong side of the market so quickly, and then they'll be scrambling. The only problem here is we are getting pretty close to that major point of supply, and whether you're going to add risk on that. This is such an emphatic gap. This is such a big pattern that I think you can say, well, stuff that. I'm going to have a crack at it anyway. So great looking turnaround setup for me. This is the plus 1/3 right here. This is the candle that you wanted to be looking at. In fact, there's another one there, but I'm going to go FRP plus 1/3 on this one. That's quite a brave call, I think, but yeah, certainly meeting my criteria. So that's the one there that I was talking about, and probably even that one there is also a third in the turnaround setup. We started today's discussion about what is a turnaround setup, and for me, this is actually a really good one. A nice short-term trend, moving into a little gap up, nice steepness in the ups, shallow downs, downward pointing shadow, telling me that the short-term and long-term trend ribbons are now dynamic demand, and pure coincidence obviously there, and a little bit of building volume certainly into that bar there. And plenty of room into the overhanging point of supply there. So a very interesting turnaround setup on Disney, and AT&T is going to be our last one for tonight. Everybody is looking very, very good as well. This one's also Nicola's, very much a continuation setup. We're seeing a great range of the three types of setups tonight, and no complaints on that one. I think this one's just very straightforward. FRP plus 1/3. Dare I say, it's almost boring. It's almost pedestrian compared to some of the other ones we've seen tonight. And I'm sure when I zoom out here, I'm not going to see anything too major, and I haven't in terms of historical overhead supply zones. So that is it for us tonight, everybody. I'm pretty sure I got to everybody's request. Let me just double check down the bottom. I think I did. So let us head back to the presentation and do the disclaimer one more time, where it says that everything we've discussed tonight is general in nature. It has not taken into account your personal financial circumstances or particular needs, or your objectives, your hopes and dreams. So before acting upon any of this information, make sure all of those are in check, or seek the help of a financial professional. Trading is risky. We opened today with a case study on Nuix that didn't go the way of at least one person, probably more of you. You could lose money. It's always you who's responsible for the stuff you do. Hopefully I can point you in the right direction on what to do and when to do it, and that's my role and responsibility here. It has been a pleasure chatting with you this evening. If in doubt, there's always the sign on the wall. Keep calm and follow the trend. All the best for your trading and investing. Till catch up again. Bye-bye for now.